we all know sort of the key economic indicators. We're all focused on GDP tomorrow, PCE deflators, CPI data. You're taking a look, though, at rhinoplasty, men's underwear sales, and a bunch of other esoteric things that apparently are supposed to tell us whether we're headed into a downturn. What is men's underwear telling us about economic conditions?
That's right. Right now, men's underwear is, and sales specifically, is telling us that consumers are pulling back just a little bit. These are sorts of, the rhinoplasty, the facelifts. These are all signs of consumer spending, discretionary spending. And it's also one, for underwear sales at least, one that Alan Greenspan, former Fed chair, really liked to look at. And it's frankly tells us a lot about where consumers' heads are at. We have this incredible run up in the past few years of consumer spending and exuberance and savings, which are still, savings accounts are still very well padded. And we've kind of hit a point right now where inflation has started to bite in a way that we haven't seen. And we're seeing some companies reacting to that as well. But at the end of the day, I mean, you have more data, more indicators now than at any point in the past. And yet it's still kind of tricky to see exactly what the signals are telling us.
Well, I want to ask about something that's way more boring than underwear. I want to talk about the yield curve because it's been deeply inverted for months now. And I mean, this was supposed to be the indicator, at least if you're in the bond market. Say we don't get a recession this time around. Does that really diminish the credibility of not just the yield curve, but some of these other indicators?
That's a really good question, because I think you have to look at not only what the indicators when they get it right, but also how many times they've gotten it wrong. And as you point out, the yield curve, we saw that invert a few times last year. And as we all know, there was no recession that followed last year. You could also see that it's inverted now. It's inverted at, decades to a level that hasn't been seen in decades. So, you do have to take these all together, right? There isn't one single indicator, even though markets love the yield curve as sort of a sentiment for where investors are at. But there isn't one single indicator that is sort of a silver bullet. If you take that alongside retail sales, the jobs market, it becomes a little bit more complicated. So, this is why it's so confusing for economists right now. There's signals like the yield curve that is showing one thing. The labor market, the top level sort of payrolls numbers is very positive, but then you kind of dig deeper into that detail and you find that it might not be so rosy.